Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for August 7th, 2010. Okay, let's start with the SPY daily view. Now, I mentioned last week that we can probably get one more push higher, and we got that this week. So we managed to squeak in just a new high above the previous week's high. But the main thing that I'm looking at right now, as far as what the market wants to do, is that it came back and retested this rising support line, especially right on Friday, and it touched 3 times. And usually, when a line gets touched 2 or more times, I would consider that to be pretty significant. Okay, but the main pattern that I see right now is some type of a rising wedge, and usually rising wedges are a sign of weakness. Okay, so that's something to be cautious about. Also, the market is pretty overbought, and there's some slight MACD divergence that's going on. So a lot of things are pointing towards market internal weakness. Now, I do suspect we can probably get one more push higher. And let me go into an hourly view. And as I mentioned already, that we are seeing this rising support line right here, and we have this resistance level up above, and it's forming some type of a wedge. The main thing you want to see is the psychology behind a rising wedge. In a typical bull market, you want to see prices, for example, make 5 steps up and maybe take 1 or 2 steps back. Okay, make another 5 steps up and then take another 1 or 2 steps back, and go on and so forth. But what we're seeing right now is the market is taking, for example, 3 steps up and then 2 steps down, 2 steps up and then 1 step down, okay, so on and so forth, until it hits this resistance level, basically to the point where the bulls are just so exhausted, seeing basically all of their work getting sold off into. In other words, they get so exhausted and tired of buying and trying to maintain this market up that they just give up, and then that's when the market starts breaking down. And that's basically the pattern that we're seeing. Now, the reason why I say that we can probably use one more push higher is that typically in a wedge, in a rising wedge, you should see 5 legs in this pattern. So we have 1, 2, 3, 4, and then 5 up. So on Friday, towards the late afternoon, we can see that we were in the process of forming that last leg higher. So as far as my upside target, I would say somewhere just above the 113 level. Okay, so we'll probably squeak in just another new high towards this upper resistance line, and that's somewhere that I'll pay attention to. But the main thing is a break underneath this rising support line, as well as a break underneath Friday's low. In other words, this 111 level. If that happens, then it tells me that now we are starting to see lower lows, and that's actually a change in trend when you start seeing lower lows and lower highs. So that's something that I would definitely pay attention to, and maybe even stab at taking some puts or short positions if it breaks this Friday's low. Okay, let me go into the VIX. Now, the VIX, as I mentioned, has been showing some pretty major divergence. The market is making new highs, but the VIX is still holding on to that support level. It's still showing that it's pretty oversold, and it's showing some MACD divergence. So the VIX is showing that it's not budging, and there's still some underlying fear. Now, if you look at this pattern, even the VIX is showing some type of a declining wedge pattern. So it's almost correlating with the market in that sense. So maybe one more push, slight push towards the downside, and if we see an upside break on the VIX, then that tells me the market is ready to head lower because fear is jumping back into the market. So we see that there's some pretty major divergence and weakness going on with the market. Sentiment-wise, it's showing some type of weakness or divergence, and also price-wise, it's telling us that the pattern is getting weak as we get each leg higher and higher. So the main thing is we can probably get one more push. I would say look for this upper resistance. Now, if it breaks clearly above this upper resistance, then obviously something else is in the works. But if that doesn't happen and it fails here, and especially if it breaks this rising support, and especially on Friday's low, then that's actually a bearish confirmation that this is a rising wedge and we are done with this relief rally. So we'll definitely pay attention to that next week.